Video 9, Rediscount. I'm Rick Nichols. I wrote a book titled Make America Financially Great. This book is based on 15 years of research that included the 1913 Federal Reserve Act and the 1864 National Currency Act. A different book titled The Creature from Jekyll Island made the financial bad guys famous. What the author of that book didn't tell us is the tricks that the financial bad guys wrote into the 1913 Federal Reserve Act to make themselves infinitely rich. That's what I'm doing in my book. Here's a quick rundown. According to the specifications written into the 1913 Federal Reserve Act, the financial bad guys worked it out so they get free reserves. And the free reserves are used to get free treasury bonds, and use the free treasury bonds to get free Fed notes, and use the free Fed notes to get free account balance increases in their checking accounts. And they use the free balances to buy anything for sale in the United States, including sex, for free. And then the process self-generates into an infinite loop, and they get more free reserves from the Federal Reserve Bank corporations. That's why I say the financial bad guys are infinitely rich. All the new specifications they needed to form this loop is in the long name. The 1913 Federal Reserve Act is the short name for the congressional act that established our central bank. The long name is an act to provide for the establishment of Federal Reserve banks, to furnish an elastic currency, to afford means of rediscounting commercial paper, to establish a more effective supervision of banking in the United States, and for other purposes. The line "for other purposes" is routinely used in other congressional acts and is not important. I'm going to quickly explain the scam built into each of these provisions. Each of my explanations are taken from specifications written into the Federal Reserve Act document. The specifications are displayed in my book. Provision 1. An act to provide for the establishment of Federal Reserve banks. We are taught that 12 district Federal Reserve banks are created as government-sponsored corporations. The trick is there were 5 more Federal Reserve banks that were authorized to function as corporations. The critical difference is that only these 5 Federal Reserve Bank corporations were allowed to file a document called the Comptroller of Currency Certificate of Organization. I refer to those reserve banks as the 5 certificates. This should be easy for the president or congressperson to confirm. They simply ask the Comptroller of Currency to display the Certificate of Organization for the Federal Reserve Bank corporations in 1914. Based on the odd way some of the specifications were written, I expect the Comptroller of Currency to be holding 5 certificates of organization that established 5 trust companies in Washington, D.C. as Federal Reserve Bank corporations that invested $4 million each. The key point to understand is the certificate of organization is needed to buy Treasury bonds from the United States Treasury. One of the reasons it is important is the Treasury bond can be deposited back into the U.S. Treasury, and then the U.S. Treasury gives the owner of the Treasury bond an equivalent amount of Federal Reserve notes for free. This procedure started in the 1864 National Currency Act where the owner of the Treasury bonds gets free national currency from the U.S. Treasury. The process is the same today, except that the Treasury gives Fed notes for free. That's how the financial bad guys get free Fed notes. Now I'll explain how they get free Treasury bonds. Provision 2. To furnish an elastic currency. The 1913 Federal Reserve Act converted United States money from gold as money to checking account balances as money. It is the checking account system that is the elastic currency. 2 checking account systems were created, and I named them. The first one is named Transferable Deposits Legal Tender Fiat Checking Account System. Legal tender checking for short. It was established by creating 3 types of bank accounts: checking, savings, and investment accounts. Banks are then required to accept account balance transfers from other banks. Transferring account balances from account to account is the same as passing legal tender coins or paper money from hand to hand in the normal transactions of life. The second checking account system is named the Fed Funds Lawful Money Reserve Checking Account, reserve checking for short. Fed Funds is the name of reserves in the Federal Reserve System. Fed Funds were originally called clearinghouse certificates. They were created in the 1864 National Currency Act. Clearinghouse certificates were used to transfer gold reserves from bank to bank as their checks were cashed by different banks. The key piece of information that the financial bad guys understood is that clearinghouse certificates were declared lawful money. Lawful money is a fiat money authorization given by Congress. But there were a few restrictions. A big restriction is that clearinghouse certificates were lawful money only while they were deposited in a clearinghouse, which means Fed funds as clearinghouse certificates is lawful money only while they are deposited in a clearinghouse, which is now called a Federal Reserve Bank. That means the financial bad guys could not use Fed funds as legal tender and buy anything they wanted. But lawful money could be used to buy Treasury bonds from Congress by increasing Congress's balance in their account at the Federal Reserve Bank. The financial bad guy sends a deposit slip to the accounting department, and the accounting department increases the balance in Congress's account. Now the financial bad guys have free Treasury bonds. Then they deposit the Treasury bonds in the Treasury, and the U.S. Treasury gives them free Fed notes. The financial bad guys still own the Treasury bonds and still collect the principal and interest from the Treasury bonds. That is how they get free reserves, free Treasury bonds, and free Fed notes. Now I'm going to explain how they created an infinite loop. Provision 3, to establish a more effective supervision of banking in the United States. The main component is the reserve requirement. Neighborhood commercial banks are required to have reserves in its account at one of the 12 district Federal Reserve Bank corporations. Then the 12 district Federal Reserve banks are required to have reserves in their account at one of the 5 certificates Federal Reserve Bank corporations. The scam is that reserves are not needed because bank account balances were declared legal tender just like gold, and gold doesn't need a reserve. The safety of legal tender isn't measured by the reserve balance in a checking account system with the name reserves put on it. The safety and value of legal tender is the amount of goods and services that can be bought with the legal tender. Today, a reserve is an account balance. The way to get reserves is for a neighborhood commercial bank to exchange a signed loan agreement for a balance increase in their required reserve account at one of the 12 district Federal Reserve banks. Provision 4. To afford means of rediscounting commercial paper. Commercial paper is a signed loan agreement that a neighborhood commercial bank uses as evidence of banker's debt that is accounted for as a depositless deposit to increase assets. A discount is the name of an exchange between a commercial bank and its district Federal Reserve Bank. The neighborhood commercial bank must exchange a loan agreement it made to a customer borrower in exchange for increasing the balance in its required reserve account at its district Federal Reserve Bank Corporation. Now, the district Federal Reserve Bank owns the loan agreement and can collect the customer borrower's payment in the legal tender checking system. The problem is the district Federal Reserve Bank also has a required reserve requirement. It must rediscount the consumer borrower's loan agreement to one of the 5 certificates Federal Reserve banks, which means the 5 certificates exchange reserves for a loan agreement. Now the 5 certificates own the loan agreement. The 5 certificates are now in a position to collect the customer borrower's loan payment. The key is the customer borrower pays the loan by transferring a balance in the legal tender checking account system to the owner of the loan, which is now the 5 certificates Federal Reserve banks. The 5 certificates account balance in the legal tender checking system increases. The 5 certificates can now buy anything for sale in the United States with a balance transfer in the legal tender checking system. The financial bad guys who own the 5 certificates are now richer than they were before the rediscount. Here is the infinite loop to be infinitely rich. The 5 certificates then buy another treasury bond by increasing Congress's account balance in the reserve checking system by using a depositless deposit, which creates new reserves. The problem is that Congress pays citizens with the balance increase, and citizens deposit Congress's reserve account checks in their legal tender checking account. The addition of reserves increases the overall balance in neighborhood commercial banks. The increased balance requires the neighborhood commercial banks to increase their required reserve balance. So, they have to discount another customer loan agreement to the 12 district Federal Reserve banks, who then have to rediscount to the 5 certificates, and the financial bad guys who own the 5 certificate reserve bank corporations get richer. And the infinite loop continues with buying another treasury bond by increasing Congress's account balance. The solution is simple. Congress increases their own bank account with a depositless deposit. One method is to take the treasury bond and register it to Congress and then deposit it into their account. Don't sell it to borrow lawful money, but use the treasury bond as lawful money and deposit it. That action will save over $1 billion a week that is budgeted to pay the financial bad guys interest on the treasury bonds that they got for free. That will make America financially great. Thank you for listening to the research of a fellow United States citizen.